There's three factors that have me most concerned about. I just wrote about it in our New Year report and all. All these three, I don't believe Trump can overcome. As I said in my report, we're going to need divine intervention to fix these three issues. The first is the continuing debt spiral. We are just spiraling out of control on debt, not just on the national level, which we now know is 36 trillion, but on state and local levels, corporate debt, consumer debt. And there's no sign of any austerity or to bring that into control. In fact, I think an argument can be made that we may see spending even ramp up through the Trump administration for certain things and all. Second, retirement crisis. Bring this up again. 2/3 of Americans are working paycheck to paycheck. They're never going to be able to reach those beautiful ads we see about how you come to us and we make you live happily ever after playing golf and sitting at a pool or whatever for the rest of your natural life. And it is getting worse by the minute. It is putting 1 out of 2 Americans, the bottom 50% of earners, 50% of them or 25% of the entire workforce now is using credit cards just to pay for day-to-day necessities. That cannot continue. You can just see the reports of the credit debt defaulting on cards, car payments now is just ballooning up. The bulk of Americans are struggling or falling. They're not moving up. There is that class, and Wall Street only deals with them, so they think in that bubble, that's how the world is, but the real world isn't that way. The third one is what's no one's speaking about now, but I hope you people mark this down because I think in the next 12 to 24 months we will, and that's the crumbling of infrastructure in the United States. Whether it's roads, bridges, ability to move power, all of that, and the cost, the astronomical cost. Give you an example. Just here in New Jersey over the past few days, we've had 10 major water main breaks in key cities. Streets collapse, businesses can't work and all. The typical water pipe in New Jersey is 75 years old. Many of the bridges in the state of New Jersey were built for 5 times the amount of traffic go over them than any engineer when they first built that bridge years ago could have imagined would go through that. This is existing throughout most of the United States. The infrastructure problem. And what pees me off about this, I hope you don't mind me saying it that way, the original quantitative easing, when Obama announced out of the last financing with Bernanke, go back, read the news, was based on the fact that that money was going to go into fixing the infrastructure problem, which was already acute back then. Money never got there. Stayed on Wall Street. Never made it to Main Street and certainly didn't make it into the infrastructure needs. So here you on one hand, you got this Wall Street talking about, AI and the need for this and that and power and all. I like to joke half of the power installations in some places, in some states, Thomas Edison installed them. It's very, very old and antiquated and there's not any money to go towards that. So it's great. I understand why people got excited on the Trump win after the 4 years that we went through and all. But there are critical issues here, like I said, that without divine intervention, we are not getting away from them and people are not prepared for them. So that arc that I spoke about in 2024 still needs to be built. And yet people are delaying yet again because, they think the sun has come out again and the rain clouds have gone away. It's clear and obvious that the main thing that drove gold higher was central bank buying. And then you have the question then is, well, why were the central banks such aggressive buyers? They're doing it for absolutely a couple key reasons. One is that they recognize that there's too much debt in the world. There's going to be a tremendous restructuring someday. Paper assets, especially in the US, got way overpriced, and therefore gold will serve a very useful purpose. I think that was their first thing. But I think the second thing is, particularly in certain countries, is as much as people, when Trump got elected, and all of a sudden everybody said, the BRICS are dead because he said, I'm going to put tariffs. BRICS aren't dead. You'll see that come the fall. They're not going to get into a verbal battle with him right now and all, but he's going to have so much on his plate, Trump. Come next fall, I don't think the BRICS are going to be anywhere near the top of his list. But that is the reason also, because those countries and the formation of that recognize that the dollar's days are numbered. Yes, it's still the best of the worst of the currencies at the moment, but the fact of its usage continues to drop worldwide, and all the other issues they're going to face, that minimally these countries are going to set up some sort of trading system within themselves and use gold in some form to give confidence to what will be a new currency or some sort of system that they will use. I don't think they fully have made up their mind yet. They bounced around with it, but I think that's the reason. And so while I continue to expect central banks to be buyers. I don't expect them to be as aggressive as they were. And in order to propel us to the 3,000 number, which I still think is a very viable number in 2025, we're going to have to start to see some real mainstream interest come in. Because remember, we rose in 2024 with liquidating of exchange traded funds and other things related to gold and all. And one of the main reasons for that was, and particularly in the junior mining sector, the cryptos were eating their lunch. There's so much money being lost. People hear about one or two that are going up. They don't know how many fail and get lost at. But the crypto market in general, I think, is way overvalued. I think this will be the year that they come back to Earth. If not back to Earth, certainly back into the orbit of Earth. That'll help money go towards the metals. And that's what silver is going to need, Elijah. Now, people get mad, and they're going to get mad when they hear me say this again, because I said it for 25 years, even when I was bullish on gold. And the silver bugs at a conference came up to me as soon as I was done, and he told me 1,000 reasons why I was wrong. But silver remains still like kissing your sister. It hasn't been able to separate itself from the chains that have kept it down. Now, you can talk about manipulation. You can talk about much better fundamental story for it. But until silver can get above $35 or $36 and stay there for more than an hour a day or a week, it's mirrored in this, the talk about it is a lot higher than the reality of it. And so I still think silver will still be second choice among metal investors. But I think as gold, which could start off the beginning of the year, particularly if he is going to go through with all this tariff stuff and everything, may see a little weakness. But I think as we get into the second half of the year, both silver and gold should overcome. Gold should overcome its high of this year, and silver should finally get above 35, 36 and really start to take hold. And maybe even as we get into that next year, even start to lead gold for a while. I don't think, unless there was a crash, I don't think gold gets impacted to the negative side to any degree. But where I do think what's important, and this has been the concern, think about this, as you know, just before Thanksgiving, we normally enter what I like to call the say no to bah humbug season, where the people on Wall Street don't even dare allow anybody to talk negatively between Thanksgiving and New Year. And then, of course, when we get to Christmas, we get the Santa Claus rally fable. Well, we actually went down during the bah humbug season. And then we started the Christmas, and we were down 300 and something on Friday. And as I speak at the close Monday, not too far from the close, we started to record. We were off a few hundred points again in the Dow. So now the Santa Claus rally is in trouble. So the only thing left is the excitement right after the election that I called the coronation, that some are viewing it on Wall Street if Trump is left. The thing that will take the stock market down is Trump having issues, not getting out of the gate right, and issues. Suddenly doesn't look like there's going to be a lot of change right away. But the bond market, this is something that people aren't talking about. I shouldn't say that. There's some of the great hedge funds guys are, and that's why they're actually short the bond market. If you think about this, how many of us would have said, be honest with ourselves, that if the Fed cut interest rates by 100 basis points over a couple months' time, we would have said interest rates would have went up 100 basis points, not down 100 basis points. Fed cuts interest rates go down. Didn't happen. Key factor. And what's really interesting, if you look at especially treasuries, we're now in about the third or fourth year of bear market. We had a 40-year bull market in bonds from the day I entered in the early 80s, even before I entered the brokerage business. Bonds, interest rates are 20%. We already went down all the way to 1 or 2%. That's where gold could be soft in the beginning of the year. And here's how. If we start moving in earnest towards 5% on the 10-year, the dollar is likely to strengthen on that, especially in the interest rate differential where Canada and other leading countries are cutting rates and all. And that strength in the dollar could be reasons to some people want to liquidate gold, or the shorts get more ammunition to play. That's the only way that I see gold coming down 10% or more in 2025. And it wouldn't be for a long period of time. That's what we lean in. Now, if the market crashed 5,000 points, people liquidate everything. I don't think that's the case, but I do think this, the giddiness, the complacency, the overvaluations of U.S. equities compared to everywhere around the world, even the comparison to small caps or value stocks compared to these thin amount of stocks that have been leading the market, are all dangerous signs. And I think we don't need a big decline. I think if the stock market just went sideways, that's bad for some people, Elijah, and here's why. 7 to 8 out of 10 families that I still see in our planning group, from day-to-day workers still up to people with businesses and multimillionaires, they're living one lifestyle at least above where their finances are. And one of the things that's helped support that is continuous gains in the stock market, unusually high gains. And they've gotten accustomed to that. In fact, if you say to people now, I think the market will go up 3 or 5%, 3 or 5%, that's nothing because they've been used to double digit, but they're living a lifestyle that needs that double digit. So it's not so much that the market goes down a lot, it's if the market just doesn't go up a lot, could change things and radically make differences in markets. And these things that I will just tell you, and this, I get nasty emails from young financial advisors, and you must have been young at one time, they would write, but this is the truth. Almost half of all licensed financial advisors now weren't born when I started in the business. And the reason I bring that up is not to tout my own wares, but to say that experience is always critical no matter what you're doing. And a lot of people giving advice now have basically been in a market that basically went one way. It never went two ways. It might have got disrupted from going up for a while, but it never went down and stayed down. Forget even about going further down, just stay down. And it's really given a sense of invincibility, or that that's always how it's going to be. And their clients are also being groomed that way, or thinking that way too. And that's why I say it's not so much if the market falls, it's if it doesn't go out up a lot, that in itself can put pressure on the market.